To build anything that truly lasts, it takes time.
Speaking with you as always, does it come as a surprise, Manishi, that finally there is a deal with Japan? Equity markets, of course, are rejoicing this move.
No, undoubtedly. It is. It has been in the offing for a while, but I think the timeline and the conclusion of this deal does come as a surprise to me because even about a week or so ago, it was under a cloud. I haven't seen the details of this deal because the sticking point was the tariffs on cars, on autos, which is, the biggest quantum of Japanese exports to the United States. But if one looks at the headlines, then, it seems kind of agreeable to both sides, and that is indeed a positive surprise.
All right. Hi, Manishi. Morning. This is Shrishti also joining in. Yes, of course, auto exports account for almost 28% of all the Japanese shipment to the US. And that is indeed big for the auto counters. But along with that, Manishi, help us understand that how is the sentiment building up for the emerging markets as well? Because on India front, we have been waiting by to see what sort of a rate that actually comes through. But along with that, how do you believe that the macro setup is shaping right now?
See, in general, I would say that the sentiment for emerging markets as a whole has improved quite considerably over the last 1 to 2 months. And there are a few drivers for that. First, it is now clear that emerging markets are in a much better position to give both fiscal and monetary stimulus, particularly monetary stimulus, to revive their economies. The emerging markets never faced inflation scare. And if you look at the trajectory of CPI inflation in almost most of the emerging markets, particularly in Asia, they have come down drastically. In fact, most of the Asian economies are in the range of 0 to 2% inflation, which gives a lot of room for their central banks to give monetary stimulus. So that's reason number one. Second, the currency. The US dollar has depreciated about 10% this year, and it seems, compared to what the economists call the real effective exchange rate of the dollar, there could be more depreciation of the US dollar in the offing. Maybe not to the pace of depreciation may not be as fast as we have seen in the last few months, but there could be depreciation nonetheless. And that is always a very strong tailwind for emerging markets. Now, what the investors are waiting to encounter are whether the earnings estimates bottom out and begin to move up. As of now, only Korea and Taiwan have seen earnings estimate up moves. India could turn out to be the next with the rate cuts and the government spending coming back, but it would possibly be relegated to the later part of this year. But in the meantime, we could see some more of this time correction that the Indian market is having. That's not a bad outcome because it is reducing the valuation premium that India has and making the market more attractive for international investors.
Right, Manishi, hi, morning. Now, this deal imposes a 15% tariff on Japanese imports, and it has been slashed lower from 25%. Come that 1st August deadline, do you believe that we could see similar reductions with major economies compared to their earlier announced tariffs?
Well, the ones to look forward to are really ASEAN and India. Right, so now the US has struck deals with Vietnam, with UK, with Indonesia, which has a 19% tariff. And so it's only among the major economies, it's only the other ASEAN economies like Thailand, like Malaysia, and the giant economy, India, which is still awaiting. I think if India gets a deal that's similar to that of Japan, which is 15% or so, that would be a good outcome. I mean, currently in the interim, I think India has about a 10% tariff deal, which is valid till, I think, 1st August, or even that. Those deadlines are really up in the air, because they're constantly changing, depending on who you speak to, whether it's President Trump or, the Treasury Secretary, Scott Bessent, but if it's somewhere in that, around the mid-teens kind of range, that would be a good outcome for India. And the best part is we would have left this policy uncertainty behind us. Because as long as these numbers keep changing, as long as they keep fluctuating, no investment decision can be made. And so it's basically some degree of certainty about these tariff rules and the policy decisions that is very much essential in the present circumstances.
Sense. Manishi, thanks so much for taking the time out and joining in today with all your insights.
Thanks again. Thank you.
Okay, that's pretty much the global construct, but let's try and analyze what the technical setup for our markets is looking like. Yesterday it turned out